Hello, this is Sabrina of Sabrina Sells DFW, and welcome to my channel. If you haven't, go ahead and subscribe. And today we're going to talk about the increase in the payments for borrowers with high credit scores. So I needed to do a lot of research for this, and that's what's kind of took so long of me putting something out is because I truly wanted to understand it because it didn't seem like it made much sense at all. But I want to just break out some major points about this topic so that you have a better understanding of what's going on in the housing market and that you understand how you can be affected. So, what the entire loan subsidy, what is being reported as a loan subsidy, is that there's a fee in the background of every loan. The fee has always been there. And what it was is as your score gets higher, typically that fee was less. And so for borrowers over a 680 are expected to see an increase in that fee equivalent to about $40 a month on a $400,000 mortgage loan. And the thing that I'd like to point out, and that's most important to me, is one that I found out that this is only related to conventional loans. So if you have a high credit score and you're not purchasing over like 480, 490 purchase price, you just get an FHA loan and there's no increase to this back end fee or whatever the case is. If your VA is not going to impact your loan, if you are thinking about getting USDA and purchasing in a more rural area, it's not going to impact you at all. It's only for conventional loans, so you won't see that impact if you're purchasing outside of conventional loans. Another thing is that people are believing that because that people with lower credit scores are going to be subsidized by this increase happening on the other end for high credit scores. They're still going to pay a higher fee for their loans. If you have a 620, you're going to pay more for your loan than if you have an 800. Their fee just went up, but you're still going to pay a fee for having a lower credit score. And it's always been there. That's just a back end fee to cover the borrowers, the lenders on the other end. It's not going to actually impact the low credit score buyers that much. It's not significant enough that you'll see a huge difference. I think a bigger win was that decrease in the fees for the mortgage insurance premiums. I think that was a bigger win overall for lower credit scores. And then another thing is that this is a subsidy this is a belief that this subsidy is going to put more minorities into homes. And I still have not found that correlation. Well, the fee is cheaper, so they're going to pay less. But if you're right, the whole point is that if you're a minority and you have lower income and you have a lower credit score, that reducing your monthly mortgage payment by $11 to $20 is going to change your entire outlook on being a homeowner when city taxes have gone up several $100s a month. So it's not going to offset or balance any scales or change anyone's mind about home ownership by having that small difference. I'm glad that it's there, I guess, but it doesn't really change much. And for me, it just typically I do purchase with a conventional loan whenever I buy my primary home, and then I refinance it still into a conventional loan once I move out of it and I'm moving on to my next, because a house hack. Um, but for me, looking at it from an investment standpoint, I'm only going to pay that fee if I pay that fee for a couple of years, and it's not enough to change whether I decide to purchase or not. And I guess that's the point, is that if you have a higher credit score, you can afford to pay that difference and it wouldn't change whether you buy a home or not. But also on the other end, the impact is so small to lower income or lower credit score borrowers that it's not going to change whether they decide to purchase a home or not. I just think of homes as investment, so it's just a fee that would be added on, and eventually I write off the mortgage anyway. So I don't look at it that way. Before, a person who's buying their primary home, I would just switch to a different loan type if you can. And honestly, once you get into jumbo loans, you're looking at something entirely different anyway. So it's going to impact people. It is. And I don't want to brush over the fact that it seems unfair, because it can easily be seen as unfair because you're paying an additional subsidy for the fact that you have a higher credit score. I do not encourage anyone to ever lower their credit score intentionally. That would be silly on your part, because there's so much more that you could gain from having a higher credit score. Um, but if you can, just switch your loan type, and then you won't be impacted by this fee at all. And if you can, take a look at other options from like seller paid, costs, and just consider that a portion of the write off for you paying this fee. Most people typically live in a home for 5 to 7 years is the average, and across the nation. And I think the last article I read about DFW was that it was changing actually every 4 to 7 years, being that we have a huge influx of people coming in, and because there's so much job opportunity, they're changing careers a lot faster than they are in other places across the nation. So they typically will live in a home not as long as other places in the US. So with you changing homes often and increasing your income, like, the focus is becoming a homeowner so that you can solidify something that will combat inflation and all those things. Because as prices rises and costs increase, the value of your home typically usually increases as well. And so it gives you something that's also increasing in value, so that when you need to, if you have to, you can sell it and still have that extra money. Um, but I don't think this rule is going to, or this change that goes into effect in a couple of days, May 1st is supposed to go into effect. I don't think it's going to impact anyone significantly on either end. It's not fair, I'll say that. You know if that's what it comes down to. I'm not saying whether it's right or wrong, but what I'm saying is it's not going to change. And this is, I'm sure, the reason why that impact was done, but it's not going to change whether somebody is going to purchase a home or not. It may just change which loan type they use to purchase their home. And if they are still going to use a conventional loan because they want to put less money down, it can still be seen as a win. And most likely you're still going to get a much better interest rate on your loan for having a higher credit score. So it's kind of offset at the end of the day. And then for lower income and lower credit score borrowers who are looking to enter into the home buying market, if they were already looking to buy, they're still going to buy. But I don't think the change is enough to impact whether they decide that this is the reason that they jump into the market, because it's not going to impact their payment enough significantly so that they will change their mind. So if you've been working on your credit score, continue working on your credit score, continue increasing your score. There are a few things that happen over time, and if you look at how they impact you in the long term, you don't want to make a short term decision that's going to impact how you operate in the long term. And another one of those things to me would be housing vouchers. The intent was that they're a temporary support, and once they figured out that that would keep people from being homeowners, then they used a lot more of them and put a lot more money into subsidizing rent, right? The same program, just for rent, that they subsidize rent for people to keep them out of homes. And so now that people can use a voucher to purchase a home, then there's going to constantly be shifts and things that are put in place to combat those things. So continue working on your credit, continue increasing your credit score. If you are thinking about buying, please do not let this deter you. It's still going to be better to pay $40 a month towards the purchase of your own home, your own investment, than it would be for you to continue renting at $3,500 a month, because that $40 impact is for people who are purchasing at $400,000. And so that rent for something for somebody at that income would be about $35 to $32 to $3,500 a month. So it's up to you, but make good decisions, and I'll talk to you guys soon.